Hello, folks. Welcome to this special video. Today, we're going to talk about a very special subject, which is Japan. And can Japan trigger the next global shakedown actually, uh, in the coming times? So, they're going to talk about some important cues coming from Japan, which is making the global markets nervous. And perhaps it can trigger in the next few days, perhaps it can take more longer. But there are some structural shifts that are happening that you should know about in the global landscape. Before we move forward, a request from my team again, please do subscribe to our channel. About half of you are regularly watching our channel but not subscribing, so please do so. So let's come back to Japan. So Japanese new prime minister has announced a massive stimulus running into billions of dollars, hundreds of billions of dollars, and the stimulus is coming as the largest, uh, package since COVID-19. Now, what is happening is that the GDP is contracting. You can see here, huge contraction in GDP has happened. It has happened earlier also, but right now for the new prime minister, this is the challenge. Q3 GDP is declined by 1.8%, and the CPI, which is the inflation figure there, is also rising up. So Japan is stuck with its own major issues where interest rates have been traditionally very low. People are gigantic. They don't like to spend too much. It is mostly an export driven economy. They have a trade surplus with most places, and at their local government level they have fiscal deficits. There's a lot of stimulus and doles being given out at all times. So what has happened is that this has amplified the concerns about Japanese health, and the ripple effects are basically to sell the Japanese market. So Nikkei 225 is already down more than 8% in 2 weeks, and this has all started towards the start of the November month, and also the yields are rising up. So Japanese government bond yields, which have traditionally been very low, they have gone up. 10-year bond yields is up at very near 1.8%. And that has not been the case for very long periods of time. In fact, near COVID, the short term bond yield was in some basis points, 20 basis points, 30 basis points. If you see the 30-year bond yield, then in COVID also, the 30-year bond yield was somewhere near 0.4%. And now we are at 3.32%. So imagine a economy where in just 5 years, the interest rates have gone up by 10 times, 8 times to 10 times. Imagine in India, we were at 5%. And in 5 years, if we go to 40%, what kind of a situation will this be? Basically, the impact will be huge, and especially if the shorter term as well as long term yield charts have been at the low end of the range for a long period of time. So what is happening is that the yen is surging. So USD Japanese yen. So USD Japanese yen, the ratio is surging. The yen is of course falling. More stimulus means more money printing, more asset, the money base growing, and hence, the currency falls versus other currency. So if Japan is printing more money than others, its value versus others should fall logically, and that's what the currency adjusts to. So the more is the pressure of stimulus from the government of Japan, the more money they will print, and the less likely is that others will demand your currency. They will want to sell. They will say that you are printing like mad. Why should I hold your currency? So that's what causes the pressure on the local currency, and it crashes. So USD Japan has been, the ratio has been going up since 2012-13. We were at 75 in 2012-13, and in just 12 years they are at 156. Imagine their currency going from, and actually speaking, in the last 10 or 12 years, the Japanese yen has mimicked the Indian rupee on a one-to-one basis. So over the last 10, 12 years, rupee has halved versus the dollar, and so has the Japanese yen. Almost, I mean, identical in terms of the last 10 to 12 years of move. So imagine a country like Japan, advanced country, developed country, and its currency is having to, uh, you know have a one-to-one correlation with the emerging market economy, developing nation like India. So they are also in a pretty big soup from a external point of view. Now, if we see the recent performance of the yen, and this is the Japanese yen to USD, the reverse. You can see that it is really going through a very tough cratering, and perhaps once it breaks down, it will really go extremely high in terms of USD JPY. So broader implications are that a global spillover can happen. Japanese, the problem, the main issue with Japan is that everybody is linked with Japan. So Japan has been the place where people borrow and they invest globally. Not just the Japanese investors, the local investors, but everybody else also. Because Japan was a stable currency and it had very low interest rates. So let's say a person in Australia wants to invest in the US. So he says, why should I not borrow Japanese yen at 1% and then invest in the US markets? I'll get 8% in S&P 500, and whenever I have to roll over, I'll pay back the Japanese yen. Now that trade can go really bad if uh, the rollover, the yield goes up dramatically. Right now he may have a borrowing cost of 2% and he's making 8%. If the borrowing cost goes to 4 or 5%, then it may not be as lucrative, and that trade may unwind. So people who have done this already over a large long periods of time may say that, okay, this route is not as remunerative anymore, so let us unwind that. So the idea here is that this lost decades of stagnation that Japan has had, that is being now sort of pushed by the new prime minister with an aggressive agenda that let's get out of this stagnation and let's push our economy forward. Let's do some structural reform. So few things can happen. Yen can keep crashing, and what may happen there is that inflation may continue to rise. Now Japan has never had high inflation, but now with such a force of stimulus being given to the local market, if the yen crashes, then basically you are importing inflation from overseas, and that may require to give more support to the local people. So it becomes a loop in itself where you're not able to control the inflation. Bank of Japan may be forced to hike. So imagine billions and trillions of yen having been borrowed, and now suddenly, when those bonds or those loans come for a rollover, they are being asked to pay much higher yield. So let's say you have a home loan, for instance, and we were having a 6% interest rate, 7% interest rate, and now suddenly next year the bank says, no, no, if you want to continue your home loan, you'll have to pay 12%. So what will happen is that a lot of implosion may happen. So a lot of assets may have to be liquidated. A lot of borrowings may have to be closed, and that may cause a global contagion. So everybody who borrowed cheap and invested abroad, like even in India, lot of investors have borrowed in Japan and invested in India, thinking that whatever they pay in Japan for borrowing is going to be very little compared to what they can make in India. But if that cost goes up dramatically, perhaps some of them may say, okay, let me take my money out of India. And that will cause a sort of a contagion of sorts, where, uh, you start a domino effect of some kind. There is some talk also about Bitcoin and other risk assets pointing to some sort of a nervousness in the global market right now, although it may be very localized to cryptocurrency world because of reasons that we'll talk about in another video. But that is also one angle that is being thought about. So major risks for the country are basically overheating, higher borrowing cost, and potential Bank of Japan intervention if things start to go out of hand. And it's a high stakes gamble to revive growth in Japan because people are not. See, imagine you are a Japanese person, and let's say you are 50-year-old. When you joined your workforce, let's say in the 1990s, markets had already peaked and they were only going down. For the first 10, 15 years of your life, you only saw the stock market go down. Only in the last decade or so, it has come back to the same level where it was in 1990. So, a lot of people in Japan are not very enthused about the stock markets. Like we are in India, there is a whole cult around equity market because in the last 20, 30 years, we have only seen it go up. If you will see any asset class that has not gone anywhere in the last 20, 30 years, why will you even bother about it? So people are, big savers, but they may not be investing in Japanese economy. Now, global market risk from repatriation. So, if this intensifies, this carry trade with what basically borrowing in yen and investing elsewhere, then all markets get negatively impacted as there is pressure, selling pressure on all asset classes. As Japanese yen weakens versus the USD, as they sort of do the stimulus, other emerging markets will also need to weaken their currencies to sort of stay in place versus Japan, and that could be a big issue for many countries, especially like India. So, like for instance, last week only, Reserve Bank so far was holding on to the 88.5 levels, and then suddenly on Friday they said, okay, we'll let the rupee go wherever it wants to go, because you can't really hold the currency artificially for too long, because you will become uncompetitive versus other currencies in your exports. Now, um, the other sort of capital outflow issue uh, could also be happening. So, if rupee starts to weaken, for instance, in light of other Asian currencies going down, uh, then some foreign investors may feel that, let's get out of these currencies, these investments for now, and we can come back in later on. So that puts even more pressure on the local currency, and it creates a feedback loop, a sort of a self-fulfilling cycle on the currencies and investments in those areas. So the takeaways for Indian investors from this situation, while it is not really a emergency situation right now, but this is a developing, I would say, thesis that this is something that can really go wrong if it does. Where India, however, today is looking quite good, it's safe, but a crashing yen will drag all Asian markets down. So INR volatility can come even though it may outperform its peers. Again, if Japanese yields start to go up, then global risk-free rates rise. This could put upward pressure on the Indian 10-year G-Sec yields also. So bond prices may dip. And we have to watch the carry trade unwinding. So if the yen crashes and forces a policy reversal rate hike to save the currency, see what will happen. If the yen starts to step very hard, what will Japanese government do? They will come and uh, try to save the currency. For that, the yield will have to go up. As the yield goes up, the bonds will start to crash. So it's a very tough situation that that not only Japan, but to a large extent even the US is getting into the similar sort of situation where inflation, yield, and money supply, all this is linked very very intrinsically, and you can't get away with a free lunch anywhere. So if you distribute too much money, your currency will go for a toss. If you try to have higher yields to control inflation, then your bonds will go for a toss. If your bonds go for a toss, I mean, you need the money to give the doles again, because politicians want to, just spend on every election to their voter base. So it's a very very tricky sort of cash 22 situation that the world has caught itself in, and that's why we keep getting these unexpected violent moves in the market once in a while, because all these are not controllable by anybody. One country can really start this ball rolling, and hence from our perspective of trying to keep our portfolios safe, I mean, we can invest to the best of our ability, but again, we have no control over the currency. So hence you need a currency diversifier, you need a asset allocation strategy in place. So all that needs to be in place, because anything can go wrong at any point of time when we watch the global markets. So let us know in the comments, what do you think about this particular topic? Do you think this move from Japan will lead to a global crash? Do watch these other videos on your screen for more content, and do of course subscribe to our channel, and do give us a like and a share if you like the content. Thank you. Bye.